So, what's my expectations on all this, and how am I expecting or predicting the future when it comes to interest rates and housing? Well, interesting. So, let's get into it. So, here's my thoughts what's going to happen. Okay, so let's break it down. Here's what's going on in the MBS market. Let's first go over to Steve Leisman. Okay, we want to get the Federal Reserve's take on this before I answer anything. So, let's get what he's saying, hearing from the Federal Reserve officials. There was actually three of them out today talking, and he's going to talk more about how Waller kind of a little bit different than the rest of them. So let's get his take and basically what the Federal Reserve's take is on all this tariff stuff going on. Stevie boy, take it away, buddy.
Right now, Steve Leisman, as ever, has the headlines of what he is going to say, what he is saying, what he might say.
Yeah, the Fed Governor Chris Waller says he is looking at two scenarios for tariffs, a large one and a small one, but he sees rate cuts under both scenarios. One scenario he said he was modeling or thinking about is that one where these big tariffs stay and the average tariff in the U.S. remains 25%. Another one's where there's negotiations and they go down to a still high 10%. He sees tariff inflation effect mostly as temporary in both scenarios. Now, let's talk about his large tariff scenario. With large tariffs, he says, I would expect the U.S. economy to slow significantly. Even talks a lot about a recession. If the tariffs threaten a recession, I would expect to favor cutting the FOMC's policy rate sooner than he otherwise had expected to. They'll reduce spending, deter business investment, and, of course, raise unemployment. When unemployment rises, he warns, quote, it often rises significantly. Inflation could hit 5% in this large tariff scenario on an annualized basis. Unemployment also could be around 5%. Recession risks, he said, though, would outweigh inflation risks. He's a little different from some of his colleagues on the FOMC. Even the Fed chair on this in his thinking that he would focus on recession risks here. Now, the smaller tariff scenario. In that scenario, the rate cuts could come on the table in the latter half of 2025, again, because he sees this tariff inflation passing through. Peak inflation would be around 3% on an annualized basis. And even in the small tariff scenario, though, it would have a negative effect on growth and employment. He supports limited monetary policy response in that scenario, but still rate cuts. New tariff policies, he said, are, quote, one of the biggest shocks to affect the U.S. economy in many decades. And well, just one more thing. We had our CNBC NRF retail monitor this morning. A decent rebound from two lousy months shows the consumer not necessarily giving up spending despite that strong decline in sentiment. The big decline in sentiment happened in April.